管他呢，刚刚给他吃呢。你拍个他的特写。
Are you feeling like that dog at the beginning, feeling some FOMO, drooling over the dip that everybody else got in but you? Well, I've got 3 plays for you today that I'm going to be watching, as well as price points that will signal when to get back in. Is there going to be another mini dip, another opportunity to get another piece of the pie? Well, you got to make sure you've got your cash up and are prepared, but I'm going to give you guys the technicals today. We got a bunch of data today. We got unemployment data and we got the FOMC notes. I'm going to go over those a little bit. I'm going to go over 3 big tech plays that I believe will do better still in the month of August, where I see opportunity. I'm going to show you in the charts. I want to remind you, though, that we are not going to jump ahead of the charts. We're simply going to follow them because it's easier. Charts and the candles will lead the way and give us more and more confidence every single day that we hold that we're doing the right thing. And you guys know that's how I've been playing it with NVIDIA. And as a result, didn't sell at 118, 119, 120. We got this baby all the way up to 128, and I'm going to tell you guys where that stands today. The sentiment overall in the market, with the data that we got out in this very choppy day, less than 1% below all-time highs on the S&P 500. Basically, the sentiment was the economy was doing well. Inflation was still coming down. That's what came out in the FOMC meeting notes. More specifically, there was more confidence in a strong economy and the feeling like inflation was coming down. The job market data actually was interpreted as strong. I'll be honest with you, I actually need to study that more because there was some concerning elements in the jobs data, but mostly Goldman Sachs and other market analysts interpreted it as having a more balanced job market. And I heard some interesting theories as to why they believed that it was stronger. Even though it was revised down significantly, people believed that it was actually good data and the markets responded bullishly to it. So today, I'm going to be looking at 3 big tech names that will still go up in August. This is the Stocks with Josh show. Appreciate all of the likes that I get right at the start of the video. It pushes the video out to more viewers. I want to warn you, both in the Stocks with Josh Discord and here on YouTube, there's people that use my name and my picture and try to scam you. And they try to get you to DM them claiming to be me. I will not reach out to you that way. But you can chat directly with me, and we can talk in the Stocks with Josh Discord. I'm going to leave a link for that in the top pinned comment. Today I did live trading. We took a piece of the Tesla pop early in the morning, made some nice money on that. And we've got a couple other great trades, swing trades, not options, that are doing extremely well. One of them I alerted yesterday, CONL, which is a Coinbase 2x leverage ETF, and that's up 10% today. It absolutely took off like a rocket after we purchased it yesterday. Timing was perfect on that one, as well as the bonk trade is up around 9% from when I alerted it over the weekend. 2 great swing trades that are working out very, very well. Guys, if you need help, if you need some trade alerts, if you need to trade along some other folks that have been doing it a little bit longer than you, if you simply need to learn how to chart, and sometimes you need to learn when to take profits, we're doing all of that in the Stocks with Josh Discord. You can find it at stockswithjosh.com. Okay, let's talk about all the data that we got today. So even though we had one of the biggest downward revisions of employment or jobs data that we have seen since 2009, which initially I thought, well, that can't be good, but others viewed it differently than me. After they broke up all the numbers, they said that the jobs data was actually bullish, that it showed a more balanced jobs market. Don't know. A little bit suspicious of that still. The type of comments that I'd heard, some were saying that the unemployment rate went up and that showed that people were back looking for work. And so even though we had higher unemployment, they were saying that it actually meant that people were entering back into the workforce because companies were hiring, and that's why that number was that way. Goldman Sachs said the downward revision was overstated, and so they interpreted the data as good. And there was even some speculation that unauthorized migrants were skewing the numbers and hiding a stronger job market. Now, that was one of the most interesting claims of the morning, which is very possible. We know that there are millions of people here in the country that are undocumented that are looking for work, and that absolutely could affect. And how would you keep track of that in this jobs data? Either way, Goldman Sachs and other market analysts took the data, even though it was a massive revision down, they took it as bullish, and that's what gave more life to the markets. And then that fed us into the FOMC data notes. And this is what's interesting there. So it was not very dovish from what I gathered. It was mostly hawkish, but the markets, after they interpreted the jobs data as bullish, they then went on to say that here was a bunch of Feds that weren't bearish, that weren't scared, that they saw a strong economy and were even questioning whether or not there should be a cut or whether the rate should be held longer, higher for longer. And so that gave the market more confidence that there was still strength in the markets, that we weren't behind the data at this point. And so all of this is yet again going to be leading to the big talk that we're going to get this week from the Fed. You could say essentially from the horse's mouth. Fed Jerome Powell is going to be talking at Jackson Hole on Friday, and the market's going to be hanging on every word to see what expectation for a rate cut is coming down the road. I'll tell you this for a fact. We've had 2 years of crippling inflation. You have to remember that when we're looking at a 3% inflation, it's not that prices have come down, that they had been up and have now come down. They're always climbing. We're only ever talking about the rate of increase. So we're still seeing prices go up every single month right now, a minimum of 3%. And so if your wages aren't going up as fast, then you're getting behind the ball, as it could be said. You're behind the black ball already, and you're in big trouble. It's why you need to be taking your personal investments more seriously, but you want to take those cautiously as well. Make sure that you know what you're doing. Remember, it's learn, test, execute, not execute. Learn your lesson, and then you find out that you've been tested and found wanting. You don't want to do it that way. So 2 years of crippling inflation, it's now holding under a 3% increase monthly. And so both the 25 basis point and the 50 basis point are in play in September. We're going to have to see which one the Fed points to. Some interesting market movers today that I need to highlight. Target jumped this pre-market 15% on good Q2 earnings. The opposite happened with the retailer Macy's that dropped 8%, not because their earnings weren't good, but they gave a bad full year forecast. Basically said that they saw some weakness in this next quarter, perhaps. JD is getting crushed. Why? Because Walmart sold. Walmart's planning on selling all their shares. They want entirely out of the business as an investor in JD. And when you combine that with the fact that we recently found out that Michael Burry, who had been quite bullish on Chinese stocks, has sold 30% of his JD position, then there's obviously a cloud of doubt over JD. Now, at the moment, my bias on JD is that they're going to remain under pressure. And as far as stocks remaining under pressure, I want to give you guys this understanding. Between August and October, it's always an extremely choppy period of the year. You're going to see a reorganization, companies that are trying to reorganize their portfolios so that they're in the right positions going into the end of this year so they can get the absolute best bonuses possible. And with this recent upswing, it gives them the opportunity to take some profits and move some resources around. But I'll tell you one good news, and one of the reasons why we're continuing to look at big tech, even though we're seeing small cap begin to move faster than big tech, the majority of investors still feel confident keeping their base in tech. But there is some rotation or a hedge over in energy. The energy hedge is all about geopolitical conflict. And so to hedge their big tech position, they're positioning themselves in some energy as well. All right, let me do another quick call for a like and subscribe. If you guys need help interpreting these markets like we just did, then you need to hit that like and subscribe to make sure you get the next video and the next play, because I don't just give my plays in the Discord. I often give them there first, and then I talk about them here on YouTube. It's a total package, folks. All right, the three companies that I'm going to talk about today are Meta, NVIDIA, and Tesla. And yes, the video is time-stamped, so you can go to the one which is of most interest to you. But I think all three of these are worth watching for different reasons. Right off the bat, when you guys remember that I did my deep dive analysis of each of the Magnificent Seven to look at which one was performing the best, out of that analysis, we found that Meta was one of the best performers. And so Meta is yet again showing strength. And I'm going to show you guys in the chart where this thing could possibly go, because it might surprise you. Like everything else, it's up against resistance right now. And so I think a lot of this is going to depend on Fed Jerome Powell. Now, I am looking for positions to take after he gives his talk at Jackson Hole this Friday. So these are not jump in positions today or even tomorrow morning. I'll be watching it very carefully. I'll give you the technicals right now, but this is what I'm looking to potentially buy the dip on so that you're not like that poor dog at the beginning who missed the last dip. If we get another dip this Friday, it could be setting up for another opportunity. All right, let's kick things off and let's go into the meta chart. Okay, let's just go through this very carefully. Here's what I want you guys to quickly identify. This is a triple top right here. Okay, so if price shoots above 540 and closes, this would be a true breakout on Meta. And the price that we would be looking to hit after that is over the course of time, going between the breakout and maybe the end of this year, we'd be looking at a $574 Meta. And so I want you to be aware, we have a very strong pattern right now. It's a triple top, which also can be interpreted as bearish. And so I think we're not going to get out of this situation without a scare. However, if you look at these three moving averages, you see that we're above the 5, we're above the 10, and we're above the 20. And I've got marked on my chart this 516 level. And I want to go through some things with you guys. We've had a massive move up, and the entire time we've stayed above the 5. Now, the last time we made a big move like this on Meta, we had an initial pump, right, that failed right beneath 516. And that ultimately had to come back and it had to bounce off the 20 before it could find the strength to move higher. It actually did that 2 times, making a higher high each time. So at this point, I believe that this move that we're in right now, we've already seen quite a lot of strength out of this. And I think that if things get choppy going into this Jackson Hole conversation at the end of this week and possibly Monday, the best entry, the best next dip that you could assume risk on would be for this bounce at 516. It would be just similar to these previous pumps where ultimately the stock was on offense above the 5, but had to come back and get a bounce off the 20 before it could have the strength to move higher above 540. Now, we also want to look at the MACD, and you guys just want to understand there that the bulls are in charge of this. And I wanted to point out something. We have bearish divergence between the previous move, this previous top, right, and the last top that we had. That's really ugly bearish divergence, right? Bearish divergence is when the price goes higher, but the momentum goes lower. And so that was pointing to the reality that we were going to get this big dip. Okay, but now we're in an interesting place where we're back at this same price and the momentum is actually slightly higher, okay? So there's no longer bearish divergence on the MACD, on the momentum indicator, on the accelerator indicator. There's no longer bearish divergence. So if we actually get a little bit of a pullback here, we cross beneath the signal line and then cross back up, that would absolutely shoot us above 540, and we could then potentially realize the bigger move in 2024 of moving all the way to 574. All right, let's talk about NVIDIA. I know that there's a lot of folks in NVIDIA right now, a lot of NVIDIA believers. We know that Goldman Sachs believes that the base price for NVIDIA is $135. We're slightly beneath that. 131 is an important resistance area. We've yet to hit it. We could get a fake out above my descending channel. We're consolidating right beneath 131. Again, we're above the 5. We've had a number of straight green days. These candles, the last 2 days, are consolidating within the body of this bullish green candle. It's also forming a flag. Having said that, again, this conversation is about where's the next scary dip opportunity where you might consider buying. Okay, well, let's take a look at the last move up that we got and how powerful it was. After we basically had 3 pumps in that last move back here. Okay, we'll call it pump 1, pump 2, and pump 3. And each time we had some consolidation. We eventually slowed down and we had to bounce off the 5. we had all these candles that didn't touch the 5, but eventually we had to produce a candle that touched the 5. Here we produced 3 candles that touched the 5 before we gained more strength. Right now we're operating off of 1, 2, 3, 4, 5, 6, 7, 8 candles. None of them have bounced off the 5. What does that make me believe? It makes me believe that we're going to hit that 5. Now, we could actually break beneath the 5 because you see that on all of these pumps, the price action broke beneath the 5. But before the market closed that day, the price sucked back up above the 5. Okay, so we have to be aware that something like that's possible. Now, we are still above this descending line of resistance. We broke above it, and we've been consolidating above it. Now, the most bullish scenario that we could find ourselves in, because we're getting very close to earnings, is that we might touch this by Thursday or Friday. We might come back here still above 124, but it wouldn't shock me if we dipped as low as 124 to kind of scare people out, get them to take profits, only to find the strength to move higher. But let me turn on a couple things here, guys. Let me show you a couple other important things. We got some info lines I need to turn on. And let me show you what those I just turned on. They're right back here. Each of these moves down was around 7%. Both of them were around 7%. This one was 6.83. This one was 7.67. Okay, so what I want you to understand is if we actually got a similar move right now, that would actually bring us below 124, okay? So just be prepared. If we got a candle that pushed up to 131 and we got a similar correction over the course of 2 days, we could easily find ourselves having to come back under 124 before building the momentum to go higher. So I do believe that we're going to continue to have some momentum moves, and I'm expecting a test of the 5 for the closing price on the day to get back up above the 5, and that would give us the momentum for the next move. And it wouldn't shock me the closer we get to earnings if we actually open above 134 and make a push higher. That just depends on how strong or how good of a beat we get out of them. Okay, the last play, and I haven't covered it in a while, is Tesla. Now, this is a bullish chart, guys. You guys know that I have told you that we've had a formation of a cup and handle pattern going on Tesla. This is very clearly the cup, and this is very clearly the handle. And so everything is bullish right now. So we have clustered these up. We've broken out in a bullish stance. I am going to be definitely watching Tesla very carefully. Any type of fake out dip over the next couple days that tests the structure or tests these moving averages, anything below this 218.90 that we end up closing back above 219, that's going to be a huge buy signal. So I'm expecting that we could test this channel again. We don't have to. We could test this channel again. We could test these moving averages that are all clustered up. And if we end up closing a candle on the daily time frame back above 219, that's going to be super bullish for me. And my immediate target's going to be 232. And now the other option is that tomorrow it doesn't slow down and it pushes above 224.90. That is the opening price of the previous daily candle. If we just push right above that, then we might make a move to this 232 early. If you're looking to buy dips and you're looking to take risk, the next risk scenario would be for a move beneath 218, possibly as low as 214.80, but you're really not going to get in then. You're going to wait for it to close the day back above 219. Those are 3 really good opportunities. I'm going to drop those charts in the Stocks with Josh Discord, and we're going to continue to trade big tech moving forward. Guys, hit the like, hit the subscribe, and make sure you get the next video. Appreciate you joining me today. Check out the Stocks with Josh Discord. That's where you're going to get the most of my technical analysis and market observations and swing trade opportunities, as well as option plays. Check it out. I'll leave a link in the top pinned comment. Appreciate each of you guys joining me today. Talk to you later. Peace and blessings.